In Investing 101 today, Travis Miller, an equity strategist with Morningstar, joins me now for a way to invest in America. Thank you for coming on the show.
Sure thing. Thanks for having me.
So we're talking about utilities. Utilities are something that I think a lot of people turn to because of the dividend, correct?
Sure. Yeah, you know, it's been a unique environment where we have such low rates on the bond side that the dividends right now for utilities really look attractive, almost as attractive as they have in many decades, given where bond rates are right now and where utilities dividend yields are right now at 3.5% across the sector.
So when an investor puts money into a utility and you get this dividend check how often?
About every quarter is when utilities pay that. Can be different, but mostly it's all every quarter.
And it can add up depending on how many shares you buy, correct?
No, absolutely. Compounding returns is a beautiful thing in the finance industry.
Another way that people take advantage of utilities is to use utilities almost like a pension. So people get a pension when they retire from their companies, but also when you invest in a utility, you have this money continuing to come in through your retirement if you hold on to the stock, correct?
No, absolutely, yeah. And we think it's a great time for utilities. The valuations are a little stretched, but you see a really good dividend growth right now. Again, the yields are very attractive relative to interest rates, and a lot of good outlook. The balance sheets are strong, payout ratios are really strong right now for utilities. If you're a long-term holder, that's the key, because valuations are stretched.
That is true. Let's take a look at some of the top names that are suggested by Morningstar. Now, there are no guarantees in any stock that you invest in, but Dominion Resources is on your list.
Yeah, I mean, this is just a really high quality. It's a large cap name in the East, taking a lot of advantage of infrastructure build out for natural gas when all the shale development has happened, and electricity generation, all the new gas generation that's coming in to that area. And then they just bought a company out in Utah, so all of the Western energy infrastructure that needs to go in there is going to be part of their build.
And this company is based, though, in Virginia, correct?
It's based in Virginia, and that's where its primary utility is based, Virginia Electric Power.
Also on your list, a name I think a lot of people have heard of before, Duke Energy.
Duke, yeah, very much like Dominion in that they have a lot of growth programs. And our favorites right now are large cap names. Duke is the largest. And when you can put money to work at the rates that utilities are able to borrow at, and the growth opportunities that they have in natural gas and electricity, that's a really attractive option right now for dividend growth.
And then last on your list, Southern Company.
So Southern Company, again, goes into the Dominion, Duke, a large cap name, a lot of capital to invest. They're building a new nuclear plant. They have a lot of investment going into natural gas infrastructure. You know, it's been beat down a little. It always traded at a premium to the group, but it's been beat down because of problems at their new nuclear plant they're building in Georgia. But again, this is a high quality company. We think that there are no concerns here in terms of dividend safety, in terms of dividend growth, and looks like a good value relative to the rest of the group.
Well, Travis, thank you for joining us for Investing 101 today.
Okay, thank you.